Hello investors and traders, today I'll speak about 3 dividend stocks, about 3 best dividend stocks to buy right now, and as usual let's start with the first company for today. It's Verizon. By the way, this year can be a very tough year for the stock market, that's why I prefer buying dividend stocks, but I prefer to receive a stable cash flow, passive income. So let's start with the first company for today. It's Verizon Communications. Its current price 37%, dividend yield is very impressive, very high. It's now for today 7%, and of course let's have a look on its fundamental parameters. So market cap 157 billion bucks, dividend yield forward dividend yield 7%. This company is holding a company which engages in the provision of communications, information, and entertainment products and services. By the way, we now see a very cheap valuation. The P/E ratio is 7. It's much less than 2 years ago, 3 years ago, and the PS price per revenue only 1.1. Also, the PS price per revenue valuation is very cheap. So for me, Verizon very cheap stock for now. Let's have a look on the revenue and marginality. We see that the last 5 years the revenue very stable. It's even increased a little bit, and the marginality rose. It was 12%, now it's 15%. So the marginality of this company also improving. All the revenue of this company 100% earned in the US. And let's have a look on the dividend history of this company. So here we see a dividend yield 7%, the dividend increase track record 18%, and the annualized 3-year dividend growth is more than 2%. By the way, the payout ratio is only 15, so half of its net income company pays as dividends. So for me, I see here a nice room even for Verizon to increase the dividend payments. And if we look at the chart, so the Verizon stock with ticker VZ traded last 10 years in the range between 61 to 37. This does the levels of the borders of the range. Now we trade in the lower border of this range. Also the momentum indicator, the RSI on the monthly time frame is 32, so the stock is already oversold. By the way, the last time we saw such a low momentum, it was 2008, the financial crisis of 2008, the market crash. So generally speaking, Verizon, nice dividend company with a great history, high dividend payments, and of course the momentum, the technical analysis telling me that now can be a nice time to buy the stock. Let's have a look on the second stock for today. It's Philip Morris, a tobacco company. So if we look at the chart, so here in my mind it was an impulse, the first wave, the second, the third, the fourth, and the fifth. Then we had a correction. It was ABC move, and here most probably the correction is finishing on or very close to it finishing. And then of course I'm expecting to see another move up. It can be another impulse. The current dividend yield more than 5%, and let's have a look. Let's check its fundamentals. Market cap actually is the same, like the same as Verizon, 136 billion bucks. It's a tobacco company. Also, this company engages in manufacture and sales of cigarettes, tobacco, and the nicotine-containing products. The valuation here, P/E ratio 17 and PS more than 4. Of course, it's not cheap, but look here, the marginality is very impressive. It's 29%, growth is 64, so it's like Google, like Apple, like IT companies actually. So very high, very highly marginality company. Its margin, by the way, increased since 2019, and also the revenue show us a slight growth for the last 5 years. If we check the revenue breakdown, so combustible tobacco is 67%, and smoke-free products about 31%. Company gained from these sectors. By country, sales by country, the European Union is 38%, sales Africa, South and Southeast Asia 13%, and Japan 12%, and Middle East about 12%. Let's have a look on the history of this company, dividend history. So dividend yield more than 5%, dividend increase track record 14%, and about 3% annualized 3-year dividend growth. So for me it's nice dividend stock to hold for this year. And another stock for today is Altria Group with the ticker MU. By the way, it's another tobacco company. So here, if you look at the chart, most probably it can be an impulse, the first and the second, the third, the fourth and the fifth. Usually the third wave, the largest wave in the impulse. And also I remind you the correctional line, the second and the fourth, usually they are changing. So one of them can be flat, but the second very sharp. So here it's very sharp, this one, and the fourth is a little bit flat. So most probably I'm expecting to see the fifth phase higher than 67 bucks. So the potential to grow here is huge. This company a little bit smaller than the previous two. The market cap is 82 billion bucks. Of course, the valuation here, PS 4 and the PE 14, it's in the range of the same as the average P ratio for S&P 500 companies. The revenue stable, actually the same level for the last 5 years, and the marginality here also very high, highly marginal company, 28%. It's very high figures. So it's not a growth company, just a company that can pay you a nice dividends for the last years. Look, dividend yield 6%, 6.5. A few years ago it was even higher than 8%. So very highly dividend paying company. All of the revenue the company earn US 100%. And also, if you will check a little bit closer to the debt level, so last 3 years it decreased. It was about 30 billion bucks. Now it's 26 billion bucks. So I remind you that now Fed fund rate is 5.25% after the last hike. So it's the highest interest rate for the last year. So of course it can be nice for the company to pay less dividends, less interest, of course, because the level of debt itself is decreasing. So for me it's nice and positive sign for this company. So generally speaking, today we had 3 companies: Verizon, Philip Morris, and Altria Group. Philip Morris I hold in my portfolio. The other Verizon also there is a small portion. So by the way, if we'll check since the pandemic lows, it was here. So now we up more than 35%, and don't forget that all 3 years you received a dividend. So it was 35% plus 6 plus 7. So it's your total capital gain. Yeah, it's your total income here on this company. If you bought it at the levels of 30, 40, so you can done more than 40-50%. Because don't forget that also the dividends. The dividend payments is another income that you shouldn't forget, and add to it the total stock performance. So it was my view for Verizon, Philip Morris, and Altria. If you're interested in dividend investing, if you're interested in dividend stocks, so press the like button. Don't forget to subscribe to my channel, and see you on the next time. Bye.